As an owner of a financial planning firm, a big part of my job is simply helping my clients avoid costly mistakes that they could make by doing things themselves. This comes in the form of investment management, tax planning, or comprehensive retirement planning, to name a few. But beyond the numbers, I spend a lot of time listening to my clients to understand what truly leads to a happy, fulfilling retirement and what they wish they would have done differently. So today I wanted to share some powerful insights from my retired clients, as well as some other retirees that I've talked to on various online forums like Facebook groups about their common retirement regrets. Make sure you stick around to the last one. You may get a good laugh out of it, and it's especially important for the younger generations that are watching. If this is your first time joining me, thank you for doing so. My name is Jake Skellhorn. I'm a certified financial planner and the co-founder of Spark Wealth Advisors. If you have anything to add to this video, make sure you leave a comment below and consider subscribing to the channel if you enjoy the video. So with that, let's get right into it. The number one retirement regret that I saw across Facebook groups that I'm a part of was not retiring earlier. It's easy to understand why this is the most common regret. We spend our entire lives saving up for retirement. It's a huge psychological shift as much as it is a financial one. But once you're in retirement, I think a lot of people have that regret because they eventually do adjust to that new lifestyle. They do make those changes and they do get used to that new chapter of life. And I think given the option, most retirees would have gone back and retired earlier, even if it meant less money to rely on for income. At the end of the day, we all know we only have one life to live. So the earlier you start retirement planning and investing, the better your odds are of retiring as soon as possible and not delaying it. I think a lot of this regret may come from the fear of not having enough money saved for retirement. Something I see all the time. We call it one more year syndrome, where people say they'll work one more year, that year passes, and then they say one more year again. Before you know it, you're in your late 60s or 70s and still working and starting to regret not retiring earlier. So once again, starting to plan for retirement as early as possible is something that can help you avoid this regret. Another common regret that I found was not becoming debt-free sooner. Even if it's low interest debt like a mortgage, carrying debt into retirement can come with a mental or emotional toll that a lot of people don't like and regret not paying off sooner. Ultimately, paying off your debt before retirement will lower your fixed expenses and allow more of your budget to be flexible on things like travel and leisure, time with the family, etc. So definitely consider creating a plan to pay off that debt before retirement if you think this is something that's going to take that emotional toll on you. Next up is the retirement regret that I probably saw commented by the most individual people on a Facebook post that I saw recently, and that is not investing more or earlier in their lives to allow for compounding interest to do its thing. Most of us are familiar with the concept of compound interest, but if you're not, just a quick example. Let's say you make an investment of $100 with a 10% annual return. Compounding interest means that after year one, you're going to have $110, but after year two, you're going to get $11 because you're getting that 10% return on your initial investment, as well as the interest that you've already earned in previous years. Over decades, this can have a massive impact. So let's just put some numbers on two different scenarios really quick. Let's say there's two people that want to retire at age 60. They're currently age 25, so they have 35 years until retirement. The first person starts their investment journey at 25 with an initial deposit of $10,000. They have an estimated rate of return of 8% per year on their investments, and they contribute $500 per month to their account. By age 60, this person would have over $1.3 million after only having contributed $220,000 over those 35 years. The second person, for one reason or another, does not start their investment journey until they're age 40, but they have a little bit more saved up to start, so they have $20,000 that they put into their investment account initially, but they only have 20 years until their expected retirement date of age 60, with the same estimated rate of return of 8%. Even if they contribute double the amount at $1,000 per month, this person is only going to have about half of the first person at $687,000, despite putting in even more principal at $260,000. So the moral of this short story is invest as early as possible because time is your best friend when it comes to investing. The regret that got the most likes and reactions on that same Facebook post that I just mentioned was that they regret not seeking financial advice earlier. Similar to the one we just discussed about not saving and investing earlier on, I think a lot of people have regrets about not seeking financial advice earlier because they just don't know enough about investing, and before you know it, years go by and you're losing that power of compounding interest. As I mentioned in the beginning of the video, one of the main ways a financial advisor provides value is simply helping you avoid costly mistakes. Those mistakes can be delaying your investment journey like we just talked about, making sure you have appropriate insurance coverage, an emergency fund set aside, making sure your financial plan is tax efficient, and again, making sure that you're investing in the right assets and not chasing stocks, not trading and trying to beat the market. As a financial planner myself, I know that 99% of people cannot beat the stock market, so that is not a place that I even try to add value. But what I can do and what I do for my clients is help manage emotions and manage behavior when the stock markets get volatile, and again, help you avoid emotional mistakes. There's a great video that Vanguard put out that shows the impact of staying invested through market downturns rather than going to cash and basically locking in your losses. So I'll leave a link to that video in the description below. And as always, if you're someone who's considering working with a financial advisor, there's also a link below where you can schedule a free introductory meeting with myself to see if we're a good fit to help you out. The next one on the list here is one that really hit home for me, and that is that a lot of retirees regret not traveling more and not traveling sooner. This one makes a lot of sense. As we age and as we get through those later retirement years, obviously we become less healthy and less mobile, and travel starts to become not as viable of an option anymore. So many retirees wish they had done more traveling to more destinations in their younger years when they could have gotten more out of it. So if you're someone who's watching this and has been putting off a trip for years because you just don't want to take the time off work, or you don't quite have enough money to make it happen, book that flight, put it on the calendar, and listen to these retirees who have that regret later in life and wish that they had made that trip when they could. If you're someone who's responsible about paying off your credit cards every month, make sure you're playing the best points game possible. Credit card points can go a long way to book flights and hotels at a much cheaper rate than you would pay in cash. So make sure that you're taking full advantage of all resources available to you to make those travel plans happen. And the last retirement regret that caught my eye on that Facebook post I mentioned earlier was that a particular retiree regretted marrying their quote unquote deadbeat ex-spouse. And while I did get a good laugh out of this, and maybe there's a more politically correct way to say it, they do raise an important point. Who you marry and who you choose to spend your life with is probably the most important financial decision you'll ever make. Being on the same page financially with your life partner as far as your saving and investing and spending habits can have a profound impact on the long-term success of your retirement plan, your travel plans, etc. So while I'm not a therapist or a dating coach, make sure that you're keeping that in mind if you're someone who's single and in the dating market looking to settle down. That's all I have for you for this video. Thanks for joining. Once again, subscribe to the channel if you got anything out of this video. Leave a comment below with any questions or any other regrets that come to mind, and we will see you in the next video.